Can you make money buying tax liens? Welcome back. In this episode, I'm going to answer your question, can you make money buying tax liens? Now, my name is Ted Thomas, and when I discovered this, I changed my whole investment strategy. You're going to see a profitable business that is going to surprise you, but everything I'm going to talk about is going to be legal, it's going to be ethical. Okay, now this business, you not only help your local county, but you're going to help yourself and you're going to help a property owner. So we're going to talk about these tax liens, okay? Now, as I say, once I discovered this business, I changed my whole business. I had been doing real estate for over 60 years, but in the last 30 years, I've been doing tax lien certificates and tax deeds. And you'll see why. It's a very stable business. There's plenty of it, and a lot of people have no idea what we're doing. So it's a nice low profile business where you can make money and do it continuously. Now, before I finish today, I'm also going to tell you about some of the common mistakes that are made at auctions. And then right after I finish, I have a free gift for all of you. So stay with me and I'll come right back. Okay, now today's episode is all about, can you make money buying tax liens? Now, I actually call them tax lien certificates so many times because that's what you'll actually buy. Now, when I started out, this was not the easiest business in the world. I started about 30 years ago as an investor. Last 25 years or so, I've actually been teaching others. I've been guiding them and acting as a mentor and a coach and so on. But when I started 30 years ago, it was one business where it was very physical. You had to actually go to the county, get a list, go look at the property and whatever. But now you can do all of this on your computer. Things have really changed. So the local counties are still quite old-fashioned, but they're slowly improving, but they're behind the times. But the one thing that you can do that you're going to be happy about is you can do this from where you're sitting. So you're watching a video right now, probably maybe it might be on your phone, but a lot of people are sitting at home looking at a YouTube video. And if you're looking at that video, I'm going to tell you, you could be looking and buying and selling tax lien certificates and tax defaulted product. You could be doing this whole business completely online. So what I'm saying is you could make money from your kitchen table. Now, how good would that be? I have lots of examples of those, which I'll show you in other videos that are also on this channel. Now, tax lien certificates, so that you understand, you invest with the local government, you're going to get a check back from the local government. So why do I tell you that? I tell you that because it's a safe and it's a secure business. I said it's safe, it's secure, and it's predictable. Now, this thing always works because local governments have been doing this for over 200 years. I didn't invent this business by any means, but 25, 30 years ago when I learned it, I learned a business that was stable and it certainly has plenty of abundance. And when I say abundance, I say that and I want you to know there's always plenty of tax liens, there's always plenty of tax deeds. Now, I like the business because the profits are steady. Now, I'm not negative on real estate, but I spent 30 years doing real estate, and it goes up, 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 and a big boom, and then comes down, then there's recession, then up, 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 and the same thing with the interest rates, up and down, up and down. This business just, it's like a flat line. It's always there. You can always make money, and once you learn how to do it, you can do it for the rest of your life. So tax lien certificates are issued by local governments. Now, the reason they issue those certificates is there's many people, I mean, I shouldn't say many, there's millions of property owners nationwide that default on their taxes. So what happens when you default? Well, major problems happen, at least at the county. So here's how it works. The United States has about 3,000 counties, a little over that actually, and about half of those counties can sell tax lien certificates. All right, now, what they do if someone doesn't pay their tax in half of those counties, and about 1,500 of those counties, when the people don't pay their tax, they send them multiple notices. By that, they send them a notice, it's called a notice of default, and it explains the consequences. It says, look, if you don't pay your tax, we're going to have to do something about it. And the something they do about it is they issue a tax lien certificate. All right, so they're going to get multiple notices. There's no surprises or anything like that. The challenge is the county really needs money. So they get these notices out right away. All right, if they don't get paid, they're going to have to sell the tax certificate. So what do? The property owner isn't paying them, so they announce on their website and they announce in the newspaper that they will actually sell those taxes to somebody else. So you could actually pay someone else's taxes. So you buy a tax lien certificate from the government. You don't buy it from me now, you buy it from the government. So you're going to buy that tax certificate. Now, why would you do that? Because you're paying someone else's taxes. Well, you don't even want to pay your own tax, let alone somebody else's. All right, you'll want to do that because you get a giant reward. Now, the tax lien certificates pay outrageous, let me say that again, they pay outrageous interest rates. Now, what do I mean by that? Well, tax lien certificates could pay 16, 18, 24, all the way up to 36% interest if you own one of those certificates. Now, I'll get into the details of it, but give me just a second to get there. All right, so there's 3,000 counties. Half of them sell tax lien certificates. Business has been around for 200 years. Everything I'm going to tell you comes right out of the statutes of the state. So this is a business that's been around for a long, long time. Okay? Now, these certificates are being sold because a property owner did not pay the taxes. Half of the states and counties will sell tax certificates. The other half will sell tax deeds. Now, the ones that sell tax lien certificates, they're really benevolent counties and states. Now, they're benevolent because they don't kick the property owner out. They do not kick the people off the property. They don't evict them. They leave the people in place. They give them time to, maybe they're recovering from a sickness, that's why they didn't pay. Or maybe they had an automobile accident and they're in the hospital. Or maybe they just lost their job and they're looking for another job. I mean, life has a lot of problems, as you know. So they haven't paid the tax, so the county does not kick them out, but they sell this tax lien certificate. So when you buy one, you do not get immediate possession, but you have this certificate that'll earn you a lot of money. By that I mean these high interest rates I talked about. Now, the other half of the states are selling tax deeds. Now, they're not so benevolent. When that person defaults, they're going to actually evict them. The treasurer is going to confiscate the property, and I'll come back and tell you a little bit about that. All right, so I have other videos that are on tax deeds. You'll get it. There's plenty here on the channel that you can get. All right, so the county announces the auction. It'll be online, also in your local newspaper. And so now you know about that auction. You can go there and you can see the numbers of the properties. And when you see that, then you can look it up and see what the property is. Is it a nice house? Is it an old house? What section of town? You can learn everything about that property you want. And they're going to sell a tax certificate. So you can buy that certificate. You don't buy it from Ted Thomas. You invest your money directly with the government. And then you just go home and you sit on your rusty dusty. It's a passive investment. That means no work. So if you're looking at a computer, you could have bought one on your computer. You could have a receipt for it, and you could just wait. Now, 95 to 97% of all those property owners will come in and pay their taxes. 95 to 97% will pay you. So that means you get back all your money. I said you get back all your money, and you get that high interest rate. So the rates can be pretty high. All right, but if you were buying tax deeds, altogether different business, now you're getting property. But right now, this episode is all about, can you make money buying tax lien certificates, which I'm going to show you. All right, so now you bought that certificate directly from the county. They give you the certificate, so now you just wait. You don't have to do any work at all right? Now, if it was a tax deed, what you'd have to do is you'd have to take possession of it. However, when you buy tax deeds, you might get a 60, 70, or 80% discount on the property. Now, in both cases, whether it's a tax lien or a tax deed, in both cases, what you will receive is you'll get a property without a mortgage. So the mortgage is actually wiped out. All right, quick review. 3,000 counties, about half of them sell tax liens, the other half sell tax deeds. Today we're talking about making money buying tax liens, or what I'm going to call tax lien certificate. Now, the property owner remained in the property. They stay in the property. You don't get possession, but you have the certificate. So that's what you really wanted. All right, now the county's already told them, issued many notices to them, multiple notices of default, telling them, look, we issued a tax lien certificate. If you don't pay the property, if you don't pay the person that buys it, you're going to lose the property. So in the United States, if you own a property and you don't pay taxes, you actually forfeit the property. You forfeit the property to the local government. So this is kind of due process taking place. They're sending you notices, telling you they're selling a tax certificate. If you didn't pay it, then you're going to lose your property. All right, so the county has superpower. In other words, they can do exactly what they want. They can confiscate the property. They can sell a tax lien certificate. In your case, they're just selling a tax lien certificate. So you're probably wondering, how do I make money on these certificates? Well, let me tell you. In a place like Arizona, if you bought a certificate, you can earn up to 16% on your money. In a minute, I'll show you how that adds up to being a lot of money. Florida, you can earn 18%. Illinois, 36%. Iowa, 24%. So you're getting the idea. powerful interest rates. So anybody can buy these. Sometimes they're $50, sometimes they're 500. But if you want to buy one for 50,000, you can do that too. So a big office building downtown doesn't pay the tax. They might have a tax certificate for 50,000. All right. The rates are outrageous. Why do I say they're outrageous? Because the bank is paying like 1% interest. And now you could be earning 24% interest in a place like Iowa. All right, now thousands of these certificates are available. For example, in the month of May, the state of Florida, where there are about 67 counties, you remember these are all sold at the county level. There's 67 counties. All of the counties will sell their certificates in the month of May. There'll be over 1 million certificates just in the state of Florida. 1 million certificates. Now, I know I'm giving you a lot of stuff, but I've got a free gift when we finish here. It'll tell you all about tax liens and the secrets there, and they'll show you profits in tax deeds. But today, we're really covering making money with tax lien certificates. So far, I think you've kind of get it. So why don't we just do some fourth grade math together? We're just going to do fourth grade. I'm going to make this super easy. So let's say that you spent $2,000 and you bought a certificate. All right, and let's say we did it in Arizona. All right, so in Arizona, the maximum rate is 16%. So how much are you going to make? Well, 2,000 times 16%, $320 for the year. Well, you're certainly not going to get rich in 1 year, but if you put the same money in the bank, you would make $20. Now you're going to make $320. So that's a no-brainer, so you might as well buy these tax certificates. Now, what people do to make money is they take that same principal of 2,000 and now the profit of 320, and they combine that and they reinvest. Now, if you combine that principal and interest and you kept reinvesting and calling it rolling it over, you kept doing that for 20 years, well, suddenly the $2,000 investment that you made isn't going to be $2,000 anymore. It's going to be $30,000. Now, those are the kind of profits you'd like to make. Now, you can do that in all the different counties. Now, I'm not a CPA, and I'm not an attorney, and I'm not a broker or a financial planner or any of that. I'm simply a prepared investor. And investors like these kind of investments. Why? They invest with the government. They get a check back from the government, safe and secure. So you don't have to worry about it. So let me just give you another example. Let's say we use Iowa. And you might remember Iowa paid 24%. So let's invest that same $2,000, except now it's going to be at 24%. Wow, 24%. So at the end of the first year, if you had that in the bank, you'd get $24, 1%. But you don't have it there. You have it in Iowa at 24. So your $2,000 now earned you $480. So what if you took that $2,000 in principal and you took the interest and put them together and you reinvested it, and you kept doing that for 20 years. Now, you don't have to invest again. Just do it once and roll it over for 20 years. Just keep redoing it. In a perfect world, what would happen? Well, at the end of the 20-year period, you would have $120,000. Now, that's enough to get any investor's attention. So you're getting the idea. So we wanted to learn how to make money with tax lien certificates. All right. Now, before I finish this video, I want you to know I've got a gift on you below, but let me do a couple of questions before I give you that gift, okay? Just hold on a second. Is tax lien certificates the same, the purchasing in each state and county? Actually, you're going to have to learn how to do this. The example I gave you was for Phoenix, Arizona, actually. But different counties can have a little different process, but it's always the same. Where you give your money to government, you're going to get a check back. That's always the same. But the counties will have little procedures, and that's why we have to teach this. And that's why you're going to get a free gift that'll show you the profits and how do you do that in tax lien certificates. Is there any way to forecast when the certificate gets paid? Well, the people have a time limit, and in America, people usually do things at the last minute. So every tax certificate and every one of these things have a different time. For example, in one state, it might be as much as 2 years, like in Florida. But if you're doing things like in Texas, it's only 180 days. So it's going to be different, and that's why we create course materials so that you guys can learn that. Okay, now there's a free gift below. Before I do that, I promised you I'd tell you a couple of things about the challenges people have at auctions and mistakes. So I'm telling you this so that you avoid it. All right, number one, biggest mistake that people make at auction. Doesn't matter whether they're newcomers or experienced people. They go ahead and they bid on properties that they haven't seen. I'm going to tell you not to bid on properties you haven't seen. Why? What if there was a hurricane? What if there was a flood? What if there was a fire? What if you suddenly discovered it was next to a chicken farm and they had one of those huge barns with, 3,000 chickens? That's probably not a good smell that you like. So you probably wouldn't want to buy that property. Another big mistake they make, which I call number two, is People get involved in the auction. They're excited. Now, when you go to these auctions, you're a bargain hunter. You want to make deals, so you're anxious. I get it. Listen, don't bid on any property. Don't bid on the property if you don't have an exit strategy. The whole key to the business is buy low, and so you have lots of margin between the buying low and the market value or the assessed value. You want to have margin. So you don't want to just get in and start bid, 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 bid. You want to know what your exit strategy is. So if you don't know what you can sell it for goodness sake, don't do any bidding. I hope you learned a lot today. My name is Ted Thomas.